Good evening. This is Eric giving you another 2-minute tax tip. And this video is going to be about S corporations and LLCs. And I'm making this video because there's a lot of bad information that's being spread about LLCs. And I want to make sure that you have the right information before you make the decision to convert. So one of the biggest things I want you to know is that running an S-Corp is more complicated and more costly than running an LLC. So when you have an S corporation, you have to file a separate tax return called an 1120S. That 1120S is going to kick out a K1 where your earnings from the S-Corp is going to be reported, and that is going to be attached to your 1040 individual tax return. So now you have more tax returns to file, which means more cost to you. Another consideration is that you're supposed to pay yourself what's called a reasonable salary when you have an S-Corp. And what that reasonable salary means, a payroll requirement is made of you. And with payroll comes more tax returns, which means to file them costs more money. Another thing to consider is that certain expenses needs to be accounted for in a different way when you own an S-Corp versus an LLC. For example, if you have a home office or you drive your vehicle for business and personal reasons, in an S corporation, you're supposed to have what's called an accountable plan, which is basically a fancy way of reimbursing yourself. And to do that the right way, you really should have an accountant on board who's going to help you. One of the myths about S corporations is that it is a legitimate way to avoid paying self-employment tax, but that is not true. Well, it's partially true. So if you caught one of the points I made earlier, I said that you're supposed to pay yourself what's called a reasonable salary and on the payroll. So when you do that, you have to pay what's called FICA taxes. FICA taxes is Medicare and Social Security tax. Being that you're an S-Corp owner, you're an owner and you're an employee of your corporation. So you have to pay both parts of that on yourself. And those two parts that you pay on yourself is the exact same amount as self-employment tax. And so it's not true that you get to avoid self-employment tax. You only get to limit it to the amount that you pay yourself on a payroll. So when I am making the decision to convert someone's business to an S-Corp, one of the major things I look at is if they are profitable, mainly around $40,000 to $50,000 a year. And now wait till we get to that range, because it's typically around that profit point where the tax savings start to exceed the extra administrative costs it takes to run the S corporation. There's a lot of other things to consider, but before you do, make sure you talk to someone that knows what they're doing and who can look at your unique situation and help you make the right decision. If you want to talk to me, I'd be happy to. Just reach out to me via social media or email me, and I'm not hard to find. Either way, be blessed.